G'day Wealth Builders and welcome back to Aussie Wealth Builders. I'm Mick.
And I'm Chloe. A huge thank you to everyone who listened to our first episode and left a comment. It was fantastic to see so many of you taking action on those foundational 5 steps.
Absolutely. You've got your spending plan, you're building your emergency fund, and you're ready for the next step. But Chloe, this is the step where I reckon a lot of people get stuck. It's the how. It all feels a bit mysterious and complicated, like you need a special password to get into some secret club.
That's the exact feeling we want to eliminate today. The process of actually buying a share is now simpler than ordering a pizza online. But the industry uses confusing language that creates a barrier. So today, we are going to pull back that curtain completely.
By the end of this episode, you will know exactly what a broker is, which one you might want to start with, and the precise step-by-step process of placing your very first order on the Australian Stock Exchange, or the ASX.
This is the practical guide you've been looking for, so let's demystify the process and turn you into an investor.
All right, Chloe, first things first. To buy a share in a company like Woolies or BHP, you can't just call them up and ask for one. You need to go through a special middleman. What is that?
That middleman is called a broker or a brokerage platform. Think of the ASX as a giant, exclusive marketplace for shares. A broker is a business that has a license to access that marketplace on your behalf. You give them your money and your instructions, and they go into the market and execute the trade for you.
So it's like a special shop just for shares. You can't buy them at Coles, you have to go to the share shop. And these brokers, they're all online now, right? It's just an app or a website.
Exactly. Now, there's one crucial term people will hear, and I want to explain it simply. It's CHESS-sponsored. It sounds complex, but it's a very important feature offered by the best Australian brokers.
CHESS-sponsored? What in the world is that?
All it means is that when the broker buys the shares for you, they are registered directly in your name with the ASX. You are the legal owner. You get a unique holder identification number or HIN. Some other, less reputable brokers might hold the shares in their own company's name on your behalf, which is known as a custodial model.
Right, so with CHESS, if the broker goes bust, it doesn't matter because the shares are legally mine. They're not part of the failed business. That sounds like a much safer way to do it.
It is the gold standard in Australia. For your first broker, and arguably for your entire investing journey, we would strongly recommend choosing a broker that is CHESS-sponsored. All the ones we'll discuss today are.
Perfect. So that leads to the million-dollar question. There are heaps of these brokerage apps out there now. How on earth does a beginner choose one?
This is a classic case of analysis paralysis. People spend months comparing every feature and fee, and they end up never starting. So we're going to simplify it by focusing on 3 of the most popular and trusted platforms for beginners in Australia: CommSec, Stake, and Pearler.
Let's start with the big one, the one everyone's heard of, CommSec.
CommSec is the Commonwealth Bank's brokerage platform. Its biggest advantage is its familiarity. If you already bank with CBA, you can integrate it easily, see your bank account and your shares in one place, and the trust factor is very high. It's been around for ages. What's the downside?
The main downside is the fees, which are known as brokerage. To buy or sell shares, CommSec can be one of the more expensive options for smaller investment amounts compared to the newer platforms. And the user interface on their app is functional, but some people find it a bit dated.
Okay, so it's the big, trusted, but maybe slightly more expensive option. What's next?
Next is Stake. Stake started out as a platform for buying US shares and has become incredibly popular in Australia for buying ASX shares. Their major advantage is cost. Brokerage is very cheap, often just $3 per trade, up to $30,000.
$3, that's a huge difference if you're only investing a few $100s at a time.
It's a massive difference. Their app is also very modern, slick, and easy to use.
It's chess-sponsored, so it's safe. For a beginner who is cost-conscious and wants a great mobile experience, Stake is a fantastic option. Any downsides? It's a newer company than ComSec, which might matter to some people, but it is very well established and trusted now.
Makes sense. Low cost and modern. So what's the third option? Perler.
Perler is a bit different. It was designed from the ground up, specifically for long-term passive investors. Its fees are competitive, and it's also chess-sponsored, but its killer feature is called Auto Invest.
Auto invest? What's that?
It allows you to set up a recurring deposit from your bank account, and then you create a template. For example, every time $500 lands in my account, automatically invest 50% in this ETF and 50% in that ETF. It completely automates the process of consistent investing.
So it's the set and forget option. It takes the emotion and the effort out of it. You just let it run in the background.
Precisely. If your goal is to simply buy the same ETFs every month for the next 30 years, Perler is arguably the best platform in Australia for that. The downside is that its interface is built for long-term investing, not for people who want to trade in and out of stocks frequently.
So to recap, ComSec is the trusted big bank. Stake is the low-cost modern app, and Perler is the automated long-term choice. Chloe, what's the final verdict for a beginner?
Honestly, Mick, any of these three are excellent choices. Do not spend another month trying to decide. The most important thing is to just pick one, get started, and make your first investment. You can always open an account with another broker later if you want to. The cost of delaying your entry into the market is far greater than the tiny differences between these platforms.
Couldn't agree more. Just pick one and move on to the next step, which is actually signing up. What do people need to have ready?
The sign-up process is just like opening a bank account online. It usually takes about 10 minutes. You will need two things: your tax file number, TFN, and a form of identification, like your driver's license or passport. That's it.
It's all very secure and regulated, so people shouldn't be worried about handing over that information. They're dealing with legitimate financial institutions.
Absolutely. Once your account is approved, which can take a day or two, the next step is to fund it. This is super simple. Your new brokerage account will have a BSB and an account number, just like a normal bank account. You simply transfer money from your regular everyday bank account into your brokerage account.
And you don't need thousands of dollars. This is a huge misconception. You can start by transferring just $500 or whatever you're comfortable with, just to get a feel for the process.
That's a crucial point. Start small. The goal of your first investment is not to make you rich. It's to learn the process and overcome the fear. Okay, so the money has landed in your brokerage account. Now for the exciting part, placing your first order.
This is it, the moment of truth. So I open the app, I'm logged in, what do I do?
The first thing you need to know is the ticker code or ticker symbol. Every single company or fund on the stock exchange has a unique code, usually 3 or 4 letters long. For example, the code for Commonwealth Bank is CBA. For BHP, it's BHP. For the Vanguard Australian Shares ETF, it's VAS.
So you just search for that code in the app and it will bring up the investment you want to buy.
Exactly. Once you've found it, you'll hit the buy button and you'll be taken to an order screen. This is the final and most important step. You'll need to decide between 2 main types of orders: a market order and a limit order.
Okay, break those down for us. What's a market order?
A market order is an instruction to your broker to buy the shares immediately at the best available price right now. You are prioritizing speed. You don't set a price. You just say, "Get it for me now, whatever the cost is."
That sounds a little risky. What if the price suddenly jumps up in the second before your order goes through?
That is the exact risk, and it's why we generally do not recommend beginners use market orders. The price can change in milliseconds, and you could end up paying more than you expected, which is called slippage. The better, safer option is a limit order.
A limit order. How does that work?
A limit order is an instruction where you set the maximum price you are willing to pay per share. For example, if a share is currently trading at $10.05, you could set a limit order at $10.05. This means you will buy it at that price or any price lower, but you will never pay more than $10.05.
Ah, so you're in complete control. You're telling the market, this is my price, take it or leave it. If the price shoots up to $10.06 before your order can be filled, the trade just won't happen.
Precisely. It gives you certainty and protects you from bad surprises. For your first trade, and perhaps for all of your trades, using a limit order is the smartest way to go. You enter your limit price, you enter the quantity of shares you want to buy, and you hit confirm.
And that's it.
That's it. You've just placed your first order on the stock market.
Wow. When you break it down like that, it's not scary at all. It's just a few simple steps. So what happens after you hit confirm?
Your order is now in the market. It might get filled, meaning executed, within a few seconds if your price is met. Or it might take a few minutes or even hours if the market price is slightly above your limit. Once it's filled, you'll get a confirmation, and very soon after, you'll see the shares appear in your portfolio. And at that moment,
Congratulations, you are officially an investor. You're an owner. You're a part owner of some of the biggest companies in Australia or the world. Take a moment to appreciate that. The hardest step is always the first one, and you've just taken it.
it's a huge milestone. Let's quickly recap the action steps. 1. Choose a trusted, CHESS-sponsored broker like ComSec, Stake, or Perler, and don't overthink it. 2. Sign up with your TFN and ID. 3. Fund it with a small amount of money to start. 4. Find the investment you want using its ticker code. And 5. Place a limit order to control the price you pay.
Simple as that. We'd love to know what the biggest mental hurdle was for you in this process. Was it choosing a broker? Was it the fear of the technology? Let us know in the comments.
And if this guide has helped you finally overcome that barrier, we'd be so grateful if you'd hit the like button and subscribe for more guides. It really does help the channel reach more Aussies just like you.
Thanks for joining us for this practical guide. Now that you know how to buy, the next big question is, of course, what should you buy?
And that is exactly what we're going to cover in episode 3. We are going to do a deep dive on ETFs, or exchange-traded funds, and explain why they're arguably the single best investment for most beginners to start with. You won't want to miss it.
Cheers for tuning in. Now, go on, get building.